You can talk to me about the weather, Carl?
I'm not going to talk to you about the weather here, but snow is in the forecast today, so do with that what you will. As I look through the details of the report here, it does look like fairly well diversified growth, and certainly gasoline prices, which have been moving erratically, boosted sales. They were up 3.5% in the month alone. That being said, these are strong retail numbers, and I think there's a positive outlook for the retail numbers going through the course of Q4, because if we go back to the last jobs report, we can see that aggregate income growth in the economy, so employment-generated income for households, is running at the fastest pace of this economic cycle. Inflation's moving sideways, so it's not that this is an inflation story. It really is an improvement in households' positions. So a little bit of a sell-off in the equity market maybe tints that to a very minor degree, but consumer confidence and sentiment is still very strong. The income growth is there, and that means this will be a very good holiday shopping season. My team's looking for about 5% growth in nominal terms.
So, Kevin Divney, consumer discretionary, is that what that translates into?
We are overweight the sector. We have been for some time. We're very confident because of the things Carl was referencing. You've seen wage growth especially robust at the lower end of the consumer cycle, and these earnings this report just confirms that's going on. The wage growth, too, in those people that have discretionary spend has been really, really robust, and we're seeing that in both the low end and the mid-end retailers. And the retail sector, I think, has been the surprise this year. The threats of the Amazon effect have been started to be overcome by the way some of these companies have adapted their business models, and they have a good equation on the demand side.